Nvidia. I've been telling you guys for months this stock's headed to 1,000 plus, and here today it is the magical day. It is over $1,000 a share. Boy, do we have some things to get into in this one. We're going to go over the numbers here first and foremost. Going to go over the numbers, show you guys what's going on here with the actual business model, okay? Then we're going to get into the conference call. Jensen took down the four main bear points that they bring up again and again and again regarding this company. He took down those boogeymen one after another, okay? Absolutely demolishing the bear case in regards to the stock. You have nothing to go off of now at this point in time. We'll speak about that. Third thing we're going to speak about, is this stock still a buy? Does it make sense to still buy this stock or not any longer now that it's going to be $1,000+ a share? And the fourth thing we're going to discuss is when the stock's going to actually break. So there's been a lot of bears trying to, call top on this stock since it was 200, 300, 400, 500, 700, 800. Now it's 1,000+. They keep trying to call the top. They don't understand when the actual top is. I'm going to explain to you guys exactly when you'll know Nvidia stock has topped, and it will have a big downfall after that, okay? I'll explain in detail the numbers. I'll show you exactly what you need to look at so you can understand when the stock will actually break, okay? So, yeah, a lot to go through in this video here today. It's an Nvidia focused video. It deserves our time and attention. Three little housekeeping things real quick before we get into this. First off, I was blown away. First off, I knew that video was going to do bad in terms of views, and sure enough, it did. It was an hour, 9-minute video I made yesterday, kind of going over my story and whatnot. But oh my gosh, the comments were so phenomenal. Thank you guys. Also had people texting me, reaching out to me that I hadn't talked to in years. So the support in regards to that video, I'm so glad you guys really enjoyed that. The people that actually got to see that one, okay? Second, thank you everybody that joined me on that Twitch live stream. That was probably the best live stream I've ever had, and certainly my favorite I've ever done. Thank you everybody that joined me over there. And then also thank you everybody that joins me over at the Reaction channel. We're now over 45,000 subscribers strong. So we're on the path to 50K on that channel. I appreciate y'all. It's still somewhat of a newer channel. It's less than 2 years old. And so to be there, I'm happy, okay? Appreciate you guys joining me as always. Thanks so much for being there. All I ask in return, takes less than 3 seconds. Hit that like button down there and make sure you're subscribed here to the channel. That's it, okay? Alrighty, guys. So first off here, look at the income statement. Oh, baby. Oh, baby. That's what we call an A+, okay? An A+. Income statement here. Revenue, 26 billion plus. They did a little over 7 billion in the same quarter last year. Cost of revenue, it went up roughly double, a little over double year over year. But here's the thing. Did their revenue go up more than double? Yes, it went up nearly quadrupled year over year. So when your cost of revenue only a little over doubled and your revenue nearly quadrupled, oh my gosh. That means your gross profit went insane. That's exactly what happened. Over $20 billion of gross profit on this company versus $4.6 billion gross profit in the same quarter last year. If we look at operating expenses, R&D, they upped that quite considerably year over year. They're spending nearly, we can call it about $900 million a year more per quarter in R&D, which makes sense. I mean, this company's innovating at a faster scale than just about anybody out there, so it makes sense to spend on R&D, right? Selling general administrative expenses, they didn't even up that much. I mean, 633 mil to 777 mil. And, I mean, guys, this is crazy. Anybody that knows anything about business, this is ridiculous. So their selling general administrative expenses was up about $144 million year over year. But their revenue was up like $19 billion year over year. You got to be flipping my flapjacks. This is the most insane. I've never seen in my 15 plus years of being in the stock market, I've never seen SG&A only go up for a company a little over $100 million, while meanwhile the revenue went up like $19 billion year over year. I can't even fathom that. That's just ridiculous. Absolutely absurdly great. This is a one-off situation. You'll likely never see something like this ever again from any public company ever. I'm just going to be honest with you guys. This is a one-off freak situation. I do not think you will ever see another company come out and have their revenue up $19 billion roughly year over year, while their SG&A went up $100 million. That's just, you can't even fathom that. Operating income for this company, nearly $17 billion versus $2.1 billion in the same quarter last year. Interest income up to $359 million versus $150 million the same quarter last year. Interest expense down very, very slightly. Other income was up very slightly, so other income about $370 million in the plus. Income before income taxes, $17.2 billion versus $2.2 in the same quarter last year. Net income, a little under $15 billion versus $2 billion in the same quarter last year. Diluted EPS, $5.98 versus 82 cents in the same quarter last year. You got to be flipping my flapjacks. But that's just a start. Look at the balance sheet. Oh my gosh. This is just on a sequential basis. This is just quarter over quarter improvement in the balance sheet. Look at this. They went from about $26 billion of cash equivalents, marketable securities to $31.4 billion. That's just on a quarter over quarter basis. Look at total assets. They went from $65 billion, so you can call it about $66 billion of total assets, to over $77 billion of total assets, just on a quarter over quarter basis. What? If you look here, okay, if you look at total assets versus total liabilities, otherwise known as stockholder equity, right? They went from about $43 billion in a plus to $50 billion in a plus, just on a quarter over quarter basis. Incredible, okay? Now, if you look at the numbers versus what analysts were expecting, they did 612 versus 559. Okay, they also did $26 billion of revenue versus 24.6. Now, it's very important everybody watching this understands what I'm about to explain. Okay, this is very important. So, for a big popular stock like an Nvidia, basically they also have a whisper number. Okay, now this whisper number is what you really need to beat in order for your stock price to go up even more. Okay. If you can come in and even beat the whisper number, then you're really, really talking. So although analysts for Nvidia, for instance, were at about $24.5 billion for revenue, Nvidia couldn't come in with 24.5. They couldn't even come in with 25, or they couldn't even come in with 25.5. And the reason they couldn't is because the whisper number was exactly at $26 billion. So they really needed to come in and beat that $26 billion number. And sure enough, they came in and slightly beat that. So that put even more positive momentum behind the stock because not only did they crush analyst expectations on average, but they also beat the whisper number. They even beat most folks that were super, super bullish on the stock. They even beat those folks' numbers, okay? So that matters significantly. When I talk to you guys about the game of Wall Street and these stock price moves and these earnings, you got to understand all this. It's a complicated subject, but I'm trying to break it down as simple as possible. I hope stuff like that helps you guys out so you just understand the games that are being played behind the scenes, okay? Now, next up here, revenue guidance. They guided for $28 billion of revenue. Incredible number. Analysts were at about 26 to 27 billion from what I saw across the board. Like basically every analyst I saw, like the 26 or 27 billion was where they were at for the revenue guide for next quarter. So the fact that they're talking about 28 billion is a great sign. You know why else it's a great sign? Because Nvidia comes in and beats their numbers every single quarter, basically, right? Quarter in, quarter out, they come in, they beat our EPS expectations, their revenue expectations. So if they guide for 28, they're probably going to do 28.5, 29, something like that, right? Maybe even 29.5 billion, right? So significantly ahead of where analysts are at. So that's more great news in regards to Nvidia. Also, they announced this 10-for-1 stock split. Does this do anything for the fundamentals of the company? Absolutely not. Could this be something that helps Nvidia's stock price out? It could actually help out Nvidia's stock price considerably. It's a psychological game some people play. It's also retail investors. It's easier for retail investors to buy at $100 versus $1,000, right? So there's all these little games that are being played. 10-for-1 stock split doesn't change anything in the fundamentals of the company, but it can help out the stock price. There's no doubt about that, right? So basically, each holder on record as of the close of the market on Thursday, June 6th, they're going to receive 9 additional shares of common stock to be distributed after the close of the market on Friday, June 7th, 2024. Trading is expected to commence on the split-adjusted basis at market open on a Monday, June 10th. Okay, so that's important numbers. No, by the way, they did also up their dividend 150%. It is such a minuscule amount, it's barely even worth mentioning, though. Their dividend's honestly a joke. But the one thing I will say, you're starting to look at Nvidia's net income they're starting to bring in, and this dividend payout could actually start to become very substantial over the next 5-10 years. Is it substantial now? No. But if you look out 5 years from now, 7 years from now, 10 years from now, the dividend payouts could be pretty substantial in regards to Nvidia. So just a little food for thought in regards to that, right? So basically, I have 33 shares of Nvidia stock in the public account. I have other shares in other portfolios as well. So my 33 shares, is basically going to go to 330 shares. But Nvidia stock's likely going to be $1,000-something at the time. So then the share price is going to move to $100-something. So it ends up equaling out. It's not like there's some arbitrage to be made here. That's not how this works. But that's basically just so you guys understand what's going to happen here. Nvidia stock price is going to go to $100-something, and people that are shareholders like myself are going to get 10 times. Or you basically have about 10 times the amount of shares here, okay? Now, Jensen absolutely slaughtered the bear case in regards to stock. And analysts asked him every single bearish point you could ever imagine. Here's the deal, okay? And we'll even go over a new bearish point that is a new thing they're trying to talk about in regards to Nvidia. So he got asked about, what about companies double and tripling ordering these chips, right? He got asked, what if customers stop ordering the current chips because your chips are getting better every year, so they're just going to stop ordering this year's chips so they can get next year's chips, or maybe not order next year's chips because they can get the better chips the following year. The third big bear case is, the folks have thought there's going to be no big Blackwell revenue this year specifically, or if there is any Blackwell revenue, it's going to be very minuscule. That's going to be more of a next year story. And then competition, right? Competition was another thing that was brought up, okay? So double, triple ordering. He got asked that question. So there's basically this thought process from bears in regards to Nvidia that all these companies are ordering a bunch of extra chips and they're hiding them under the filing cabinet or something like that, and they're putting them under the desk and they're not really using them, they're just buying them to buy them. And basically Jensen just kind of killed that down. He said, everything that's getting put out into the market, these companies are using right away, right? For instance, Tesla. They have about 35,000 H100s so far. Elon Musk says he wants to get to 85,000 at least H100s by the end of this year. Tesla's using all those chips. They're not just like, oh, let's put them over here in the corner and we'll just stack them up. Maybe we could resell them in the future for more money, or maybe we can just, see them collect dust. No. You're not going to just order chips to order chips. You're going to order chips because you need those chips to run these programs, right? To advance your AI ambitions and to advance your company. That will hopefully bring in a lot more customers, revenue, profits. Okay, so he killed that down. Like that's just a ridiculous thought process that these guys are just going to order chips to order chips. It's not the way this game works, okay? Believe me, these companies aren't doing Nvidia any favors. They're not like, oh, let me just order extra billions of dollars of these chips just to order them. No, okay? And also remember, all these chips get better each year. So if anything, you're not incentivized to order more chips. It's not like Nvidia saying, we're going to make 1,000 of these chips and that's all we're ever going to make and we're never going to make these chips better. No, you're the opposite of incentivized to order chips you don't need. You're only going to order what you need. So the whole double, triple ordering is baloney. It's a bear case that's been talked about that's baloney. He killed that off. Second thing is, customers, what if they stop ordering H100s because next year chips are even better? And what if they don't order these Blackwell chips because the following year's chips are going to be even better, right? So that was an analyst asked that question. There's another bear point that's made out there. Okay. I explain it like this. It's an arms race between these companies, right? And Jensen described it as a race. I describe it as an arms race. I don't think he wants to put it as nice as maybe violent as that, but it's an arms race between these companies. You can't, and Jensen explained this on the call as well, and this is something I've been explaining in videos for probably months now. You can't stop ordering these chips, because if, let's say you're Meta, okay, my biggest investment in the public account. Let's say Meta's like, you know what? We're spending too much on these chips. And you know what? They're going to come out with even better chips next year. So let's not order any chips this year, okay? Meta could do that. Zuckerberg could do that and be like, we're going to save billions of dollars. But now you just put yourself behind your competitors. Your competitors now are going to potentially win the game of the next decade, 10 years, 20 years, 30 years, these huge, massive opportunities. You can't just choose to be like, you know what, I'm not going to buy the most advanced chips. I'm just going to stick with what I got right now. Do that and lose. Do that and lose. You can't do that because every year the chips get better and better and better and significantly better. I mean, we're talking about some of these improvements are 50% improvements, 100% improvements, sometimes even hundreds of percent improvements on one chip one year versus the next chip the next year. So you can't just say, you know what, I'm not going to buy these GPUs, I'm not going to buy these new AI chips. No. This is not how this works. Okay, and Jensen explained that on the call, and that's something I've been explaining for months. I mean, these analysts should probably just watch my videos instead of doing whatever the heck they do because they're clueless. And they talk about these points. I'm like, dude, this is like, it's proof to me that they don't understand the business model. They don't understand the business model, and they don't understand Amazon, they don't understand Meta, they don't understand Tesla, they don't understand Google. I'm like, they don't understand ChatGPT, they don't understand Microsoft. I'm like, holy smokes, man, it's insane. Third thing is, right, there's been a thought process about No Big Blackwell, their new chip that's going to cost roughly $40,000 each, right? There's a thought process that no big revenue this year. Jensen said there's going to be a lot of revenue from Blackwell. That was his quote, a lot of revenue from Blackwell. It sounds like they're already ready to sell this thing heavily in the back half of this year. Heavily. Not a small amount, a lot. Okay. So could we see a $30 billion plus revenue quarter this year, as in this calendar year? Because now they're on to their next fiscal year. But could we see a $30 billion plus quarter in this calendar year? The answer is likely. The answer is likely after hearing his Blackwell comment there, okay? Fourth thing, competition. Competition, oh my gosh, competition. Are they going to catch up? These sorts of things, right? AMD, these other players. Okay, Jensen went through the whole thesis around how Nvidia is really the only company in the world that has everything in place to make your chips as successful as possible. From the infrastructure, from the software side to the hardware side, to be able to change models. They have the whole ecosystem in a way that no one else does. AMD is a very successful company, but they are not Nvidia. And they cannot compete with Nvidia in this space in any substantial way. And if you ask Lisa Su, I mean, if she, obviously she can't say that in an interview. That sounds really bad. So she would never say that. But if you could, put some truth serum in her and listen, she would tell you that. Intel, stop it. If you think Intel is going to beat Nvidia, stop it. I don't even know. It's just ridiculous. It's like sometimes it's like not even worth my breath. Not even worth my breath, okay? Now, there's a new bearish thesis out there, and I heard this from a gentleman last night. I really got a lot of respect for this gentleman. I think he's got a lot of good perspectives on a lot of things and a lot of subjects, but man, he's been bearish on Nvidia for well over a year. He's grasping for straws, and this is a new bear thesis, okay? So, here it is. Nvidia has to crash their stock and their pricing on their chips, because if they don't, big tech companies are going to hire away all their best workers, and they're going to build the same chips as Nvidia, and they're going to be just as successful, and so they're not going to buy their chips, okay? Listen, first off, as somebody that's my biggest investment's Meta, my second biggest investment's Tesla in the public account, and my third biggest investment in the public account is Amazon. I wish that were true. I wish that were true. I wish it was so easy that Meta could just hire away the best employees at Nvidia and make just as good at chips. But that's not the way this works. It's not the way business works. It's no different than saying, Meta can just hire away a few of the best, hardware folks at Apple and make a competitor to the iPhone. Okay. Yeah. Good luck. Okay. That's like me saying, Tesla, they could create the next Facebook. They could create the next Instagram and WhatsApp. Just hire some employees away from Meta. That's not the way this works. That's not the way the business works. You flip my flapjacks? You think it's that easy? I mean, I wish it were that easy, right? You think all the VC guys wouldn't do the same exact thing? Of course, all the VC guys with all they're loaded with so much money, they would go hire all Nvidia's best workers if they really thought there was a realistic possibility they could just hire some of their best workers away from Nvidia and then steal those folks away and then create the chips that compete against Nvidia. Like, come on, man. Come on. If you really understand the space, you understand that AMD can't even compete with Nvidia in many of these markets. And that's the number two, by far, the most successful company in the space, underneath Nvidia. If they can't, Lisa Su and those folks, that very talented team, if they can't, you think just everybody can just, hire some Nvidia employees away and create, come on, man. Like, this is what I call desperate attempts from people that have been very bearish on Nvidia for a long time. You got to wake up sometime and say, I was wrong, right? I've had to do it plenty of times on stocks where I have to create a video and I say, damn it, I was wrong on this stock. Like, I can't believe it. Like, I was wrong. And you got to admit it sometimes. I've done that plenty of times on plenty of stocks over the past, I don't know, what, 7, 8 years I've been on YouTube. Sometimes you got to admit defeat. And these bears on Nvidia have been bearish again and again and again for the last 18 months. And they're wrong again and again and again. And they can't just accept defeat. They can't just throw in the towel and say, you know what, I was wrong. I'm gonna stop trying to create these bearish theses because none of them come to fruition. And we're wrong again and again and again. Some point you got to do that, man. And they still haven't done it at this point in time. It's crazy to me. Crazy to me. There's also a misunderstanding of how big tech companies work and how options work and the vesting schedule and everything like that. These big tech companies, they didn't become, hundreds of billions of dollars in market cap and trillions of dollars in market cap by accident. They became that because they're very intelligent, okay? They understand you got to lock the employees in. So they have these 4-year vesting periods, right? Ask anybody that works for big tech. They'll tell you about the whole vesting schedule and whatnot. And I know several people that work for the big tech companies. They all talk about their vesting period. And so you're not really incentivized, if you are a top employee at Nvidia, to go leave Nvidia. When you're on a vesting plan and you're going to get a ton of shares and shares that are going to be extremely, extremely valuable, it doesn't make sense to go depart from that company, okay? So that's also a misunderstanding of how these big tech companies work in their vesting schedules and those sorts of things, okay? So the new bear-like thing is just, I wish it was true, but it's just a bunch of crap, okay? Next one up here, is Nvidia still a buy? And then we'll talk about, I'll show you exactly when Nvidia will actually break and their stock will break, okay? So is Nvidia still a buy? You got to look at valuation, okay? So looking at 1000xstocks.com here, okay? So first up, forward P. That forward P takes into account analyst estimates kind of averaged out, right? They're wrong. Analysts are wrong. So likely Nvidia is probably trading at a forward PE in the 30s. I would say somewhere between 34 and 38. That's the reality forward PE. And that's even after the stock price move after hours, okay? Which is up like 6%. So I would say the reality forward PE is probably 34 to 38. So we're trading, you can say Nvidia is probably trading at about a 2x the average forward PE in the stock market, right? About 2x if we're trading 34 to 38. But here's the deal. Look where the average stock, growth rate is for revenue, and look where Nvidia's at, right? And keep in mind that number's probably low. Next year, that number's probably low as well. That number's probably low as well. And look where the average, so you're talking about a company that's growing 10x, 20x, 30x, top line, bottom line, versus average stock in the stock market is only trading at a forward P of about 2x. At the end of the day, Nvidia is still a buy. People get so caught up in, well, the stock price is up so much this year and stock price is up so much since the bottom in 22. It's all irrelevant. It's all irrelevant. I could have said the same thing in late 2022, when Nvidia stock was troughing out at $100-something, I could have said, well, 10 years ago, Nvidia stock was only this, and now it's this, and 5 years ago it was this, and now it's this, and this is crazy to pay this price, right? I could have sold it. That's all irrelevant. It comes back to valuation. When you're paying only about a 2x on a forward PE for a company, and they're growing 10x, 20x, 30x, the average stock in the market, you're getting actually great value there. You're getting a great risk-reward profile. And when you're talking about a company that's a game changer, one of the best companies in the world, if not the best company in the world, right? We might have to start respecting Nvidia as the best company in the world. We might have to. Especially if the market, I'm going to be honest with you guys, Nvidia's market cap, it's probably going to become the biggest in the world. When they become the biggest in the world, are we going to start respecting them as the best company in the world? We might have to, right? We might have to. So you should pay some sort of premium for the best company in the world as well, which means Nvidia stock is still a buy, even at this point in time. Even though the stock has gone up so much, it's all irrelevant. If people didn't know the stock was up so much and they were just given the numbers behind the company, I think everybody would be buying Nvidia, or everybody would be holding shares of Nvidia right now. But the fact that you get these stock prices to move up a lot makes people say, oh boy, it's up a lot, it has to come down. Ask people about real estate. I've been hearing people for 10 years now, prices are high for real estate, they're going to have to come down. 10 years I've been listening to people, friends tell me that, right? And they're still waiting. And meanwhile, over the past 10 years, prices have what, doubled? More than doubled in many markets? Come on, man. Next thing in regards to, Nvidia still being a buy, you got to understand Wall Street's, they have no conception or clue about what's going on here with Nvidia, okay? These folks are, I think, going to slowly get educated on this stock, very slowly. They're making a lot of bad moves in regards to the stock. They sell off shares at bad pricing, right? We've seen it continually. Then they realize, oh crap, we screwed up. Then they have to buy it back, right? And so the same ones that are selling the stock at 700 recently are going to be the same ones that are buying it at 1,000 plus. And so you just got to understand there's still a lot of money out there to go into Nvidia stock that's not there. You got a lot of people cautious. You got a lot of people that were bulls in the stock that went more bearish recently, sold out of huge positions of their shares because I don't know, they thought it might be the top because they don't understand the chip cycle we're in. They don't understand Nvidia's business model. They don't understand pricing. They don't understand the competitive landscape. They don't understand any of this. And so they're just kind of like, let me sell 71% of my shares. And those folks will buy the stock back at much higher prices. They do it all the time. Next one up here. When is Nvidia stock actually going to break? I'll explain to you guys exactly when Nvidia stock's going to actually break so everybody knows, okay, that's the moment, okay? Because everybody's been talking about this, talking about that. It's all a bunch of talk. You got to know the numbers, okay? By the way, Nvidia also announced, Jensen announced in the call toward the end, he was talking about new AI chips every year. So these cycles, this is a multi-year cycle of these chips, okay? But let me show you exactly when Nvidia stock's going to break, okay? So you got to pay attention to sequential numbers, quarter over quarterly numbers, right? Year over year matters significantly, right? The growth is insane. But Nvidia, in order for the stock to continue to move higher, they got to continue to put up nice growth on a quarter over quarter basis, okay? So if you look at the most recent numbers here that were reported a couple hours ago, the revenue on a quarter over quarter basis up 18%, data center up 23% on a quarter over quarter basis, right? GAAP EPS up 21% on a quarter over quarter basis, and non-GAAP up 19%. Now, Nvidia stock will break when we get to low single digits growth on a sequential basis. When we get down to low single digits, that will be the moment that people start to get very fearful of Nvidia stock, because they're going to look at the Nvidia stock and they're going to say, uh-oh, the growth story is about to break in regards to this. Because once you start getting down to single digit sequential growth, people start thinking, and might be wrong, by the way, but they're going to start assuming and thinking that next up is Nvidia is going to go negative on a sequential basis. And no one wants to be part of this stock when it starts to go negative on a revenue basis. Now, when does this happen? I mean, guys, it could be several quarters from now. It could be several years from now. To predict that is impossible, but that's the moment that if you want to get a little bearish on Nvidia, that's when you actually could get bearish on Nvidia. When you see, if they all of a sudden put up a quarter where it's only like 3% growth on a quarter over quarter basis, 4%, 2%, 1%, ooh, that's the moment Nvidia stock starts to do a major downfall, because that's when everybody will start freaking out. And that will likely be it could be a year-long kind of bearish overall cycle for Nvidia. It could be a multi-year bear cycle, but you might be waiting a while for that. But that's when it's going to happen, okay? That's when you'll know there's problems. Now, ELF on a shelf, right? I'm going to speak about ELF tomorrow. There's another clownish situation by Wall Street, right? They're selling their stock off in the 130s after hours. I'm looking and I'm talking on the Twitch live stream. I'm like, these people are jokers. They're going to be buying this stock right back. And sure enough, they're buying that stock right back. Next thing you know, it's 140s, 145, 150, 155. Now it's 159. And it's just like, it cracks me up. I'm like, the ELF's numbers were absolutely phenomenal, and everybody freaked out because their guidance was a weak guide. Guess what? They do a weak guide pretty much every year. And then guess what happens? They come in, they beat their numbers. ELF's beat like 1 million quarters in a row, EPS and revenue. What do you think they're going to do with these numbers? You think they're going to miss? You're going to think they're going to miss? Come on, man. Get real. Like, they're going to come in and kill it again. And so we'll get into ELF tomorrow. But that's Wall Street, right? And, there's a couple people who are in the chat, Twitch. It's like 1% or 2% of people are actually like trolls and, hate me. But those folks, they were like trying to make fun of me when ELF stock was going down there initially right after hours, and I'm just like, it's just like, what are you doing, man? Like, I'm up like 2,000% on the stock. Like, It's a joke, man. It's a joke. Anyways, guys, appreciate you joining me as always. There's a lot of funniness out there. That's all I can say. If you're looking to take your game up to a much higher level than where these Wall Streeters are at and where these other folks are at, apply to join my private group. There'll be pinned comment down there. Teach you all these different things, all my course curriculums in there, and get to join a group of actual serious investors that are focused on fundamentals of the companies, focused on buying great companies, adding great assets, dollar cost averaging on great stocks that have beautiful 5, 10-year out futures, and avoid all the other games out there. Let's just call it that, okay? All right, guys, much love as always. See you tomorrow, and have a great day.